Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everyone. This is Bloomberg Business Week on this Thursday. Carol Master along with Tim Stanovic. The Great Resignation, it's great for a certain group of workers in particular. So writes our Justin Fox.
Yeah, we've been talking a lot about the Great Resignation, I think, in the context of white-collar workers. But the fact is, as Justin digs down into the data, it has little to do with white-collar jobs. It's more about lower-income people getting the chance to move up and make more money.
All right, we'll get more from him in just a moment. Right now, let's get more from Charlie Pellet, who's tracking the trade on Wall Street. Hey, Charlie.
Well, hello there. We're looking at a mixed day. Carol Master, we've got the Dow down, S&P, NASDAQ, both pushing higher right now. 7-point gain in the S&P, up by 0.2%. 10-year yield right now, 1.58%. Do want to begin, though, with a story from Apple. It has now chosen February 1st as the deadline for corporate employees to begin their return to offices. That is a slight delay from its previous goal of January, marking a key step toward getting its operations back to normal after the pandemic. Apple up now by 2.7%. A group of state attorneys general are investigating Meta Platforms' efforts to engage children and young adults with Instagram and the harms that result from that. Meta Platforms is the company that used to be known as Facebook. FB, Facebook shares down now by 0.8%. First day out for Sweet Green, just about doubling its value in its trading debut after $64 million in an IPO priced above a marketed range. Right now, Sweet Green shares, they're up by 80.4%. NASDAQ 100 index on track for a record amid a rally in big technology. NASDAQ 100 up now by 0.7%. NASDAQ Composite Index up by less than 0.1%, up 10 points now. S&P up 8 higher by 0.2%. The Dow down 72, also down 0.2%. Spot gold down 0.4%, 18.59 the ounce. West Texas Intermediate crude up 0.8%, 78.97 a barrel. The American Medical Association and more than 60 other U.S. health organizations are endorsing the Biden administration's vaccine mandate for companies with 100 or more employees. They say the requirement is reasonable and essential to protect workers. Bill Gates says COVID deaths and infection rates may fall below seasonal flu levels by the middle of next year. Gates' remarks came at the Bloomberg New Economy Forum in Singapore. Dr. Chris Beirer is a professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. He says there's still lots of work to be done on vaccinations.
I think what we've seen in the U.S. and what we're seeing right now, unfortunately, as cases creep up with the colder weather and heading toward Thanksgiving, is that the total immunization coverage in the U.S. is still under 60% of everyone in the country. And that's why we're still seeing over 100,000 new cases a day.
Dr. Chris Beirer with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we track every day at this time. Pfizer up 0.5%. Its German partner BioNTech, its ADRs down 2.1%. AstraZeneca's ADRs down 1.8%. Moderna up by 3.3%. Johnson & Johnson down 0.6%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we talk about this a lot when it comes to trying to understand today's labor market and really the impact of the COVID pandemic. Writing about it in a Bloomberg Opinion column about how the Great Resignation is great for low-paid workers is none other than Justin Fox. He's columnist at Bloomberg Opinion. He joins us here in our Interactive Brokers studio. Nice to have you here. We're chatting a little bit before we got going. We talk about this a lot. Tell us what your intel has said or shown about what really is going on when it comes to the Great Resignation.
Well, I mean, everybody's been talking about it for months, and at least in my inbox, it's mostly all these consulting firms and PR people wanting to talk about white-collar workers being dissatisfied with their jobs or otherwise wanting to reboot their lives and work-life balance.
Traders on Wall Street who can't date and they switch for another job.
Exactly, and a lot of that's totally
just
real.
Looking for love, Carol.
Exactly. But there's this monthly report that the Bureau of Labor Statistics put out, and the one for September came out last week, and where they measure the quits rate, which is just the percentage of jobs that people left voluntarily in that month. And the quits rate was 3% in September. That's the highest it's ever been since they started measuring it in 2000. And it's jumped a ton over the past 6 months or so. And if you look at it by industry, it turns out it's not the financial industry. It's not information, which is where a lot of the tech companies are and where Bloomberg is too. It's leisure and hospitality. It's non-durable goods manufacturing, which doesn't pay as well as durable goods. It's healthcare, but you got most healthcare jobs are not highly paid doctors or nurses. And so what it seems to be, at least lately, and again, over the course of the pandemic, different things have been happening, but the phenomenon of right now is low-paid people are quitting to take slightly higher-paying jobs. And that's how, because hires are up even more, hires are higher than quits are. And that's just happening all across the board. And it's kind of I'm sure it's very frustrating for the employers who are losing some of those people, but it's kind of a very healthy phenomenon that was not happening for most of the 2010s. It was starting to happen a bit in 2017, 18.
I'm glad you say it was kind of a healthy phenomenon, because I think about the way that prices have not been raised in many parts of our lives over the last decade. And I wonder to what extent this type of pattern is supposed to happen, where workers are supposed to have this type of choice, that if they do actually find a job that pays more, they can go to that. And those jobs are available when they haven't been in the past.
I mean, the Atlanta Fed breaks down wage gains by income quartile. And basically the bottom quartile, the people who make the least money, are seeing the biggest gains right now. And the last time that happened in an extended, and they've been seeing the biggest gains since about 2015, but they keep getting higher. And the last time that happened in a significant way was the late 90s, which was a pretty great time economically speaking. And so, that's a good thing. That's decreasing. Wage inequality has totally been decreasing over the past few years. I don't know if overall economic inequality has, because obviously a lot of people are getting rich off things other than wages. But wage inequality has been decreasing. Opportunities for people who don't have college educations have been improving for the last few years. It's good stuff in a lot of ways.
So net, the takeaway, does this work towards reducing the gap that we're seeing between the haves and have-nots essentially? And longer term, does it mean wage inflation maybe isn't sticky, because sometimes those jobs have a lot of turnover and just got about 35 seconds?
It seems like wage inflation might be a little stickier, although I would imagine COVID is still holding some people back from the labor market.
Yeah.
This closes the gap. It doesn't close it all, and it's not the only thing that needs to be done, but it decreases inequality.
Well, and it equips us with a smarter round of conversation, because we are talking about just people rethinking, their role in the workforce.
Also, after reading the column, makes me wonder, too, about price increases that we'll see at some of these places that haven't been raising wages, that realize they do, because they're going to need more money to pay their workers.
All right, we got to run. Justin, thank you so much. Justin Fox, he's columnist at Bloomberg Opinion. Check him out at Twitter at FoxJust. And he's joining us in our Interactive Brokers studio.
Let's head now to Washington, D.C. for a check the latest world and national news in the 99.1 studio. Nancy Lyons. Hey, Nance.
Hey, Tim. Georgia prosecutors have spent much of the day cross-examining defendant Travis McMichael, who is one of 3 men on trial for murder in the shooting of black jogger Ahmaud Arbery. Cobb County prosecutor Linda Dunikowski walked McMichael through his initial encounter with Arbery, where McMichael had claimed on paper that Arbery reached into his pants.
Yeah, he did not threaten me verbally, no ma'am.
All right. Didn't brandish any weapons?
No ma'am.
Didn't pull out any guns?
No ma'am.
Didn't pull out any knife?
No ma'am.
Never reached for anything, did he?
No.
He just ran.
Dunikowski contends there was no justification for McMichael and his father to arm themselves and chase Arbery when he ran past their Georgia home last year. Julius Jones will not be executed in Oklahoma. Governor Kevin Stitt commuted Jones' sentence to life in prison without parole just hours before he was set to die. His supporters cheered outside the prison when they heard the news. Jones has spent more than half of his life in prison for a 1999 carjacking and murder. He claims he was framed by his co-defendant. Get ready for a rare celestial event tonight. It's the longest partial lunar eclipse of this century, the longest in 580 years. It will grace the night sky late tonight and early tomorrow morning. A lunar eclipse happens when the sun, Earth, and a full moon form a near-perfect lineup in space. Weather permitting, it should be visible across the entire country. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Massar along with Tim Stenovic. Don't you love this?
Let's talk inflation.
Let's talk inflation.
What were you going to say?
All right, let's talk about the Buy Nothing group.
Okay, this is a really
groups.
interesting story that grabbed our attention earlier today. It's in the Wall Street Journal. It's by Veronica Dogger. Millions of people are joining groups right now that help them acquire things they need without actually paying a cent. We just talked with Justin Fox about the way that economic pressures are putting pressure on workers, or giving workers power, I should say. And we talked about this earlier in the day as well. With inflation hitting a 31-year high, Veronica writes, and supply chain issues making it difficult for people to get the goods that they want on time, some have found an answer in online groups where members just give things away for free.
So I kind of like this. It almost sounds like bartering or going back and forth with stuff. It sounds like what my family does. From a large family, we're big on hand-me-downs, and we share it with nieces, nephews, siblings, you name it. Anyway, here's how it works. Members post items to give away or lend, or post for items they are seeking. Items in Buy Nothing groups range from food to furniture to, in at least one case, hair clippings. Don't ask. Buying, selling, and bartering are not allowed. Many groups are hosted on Facebook. Such groups have risen in popularity in recent months. One effort known as the Buy Nothing Project hit 4.27 million members as of August. I kind of love it.
It's great. We actually have something kind of like this in our apartment building.
Do you?
Yeah, we have a table in the basement that's sort of the free table, and you put stuff on it that you no longer use. And oftentimes what it is it's stuff that kids have outgrown, toys or books. And then here's how it works. My son walks by it and just grabs everything from the table and tries to take it up to our apartment.
You're like,
I'm like, this is trash, actually.
Don't do this. I mean, our neighborhood, what we tend to do is people put things out on the stoops.
It's the same as ours.
And it's like it's free. Like, just take it. And it's just a way of saying, if you can use it, God bless.
Okay, TMI.
What?
We actually found 2 IKEA chairs outside that matched 2 that we already had. We still got them sitting around the kitchen table.
But this is so great. Rather than tossing it, like, reuse it. The world goes round and round, right? Your garbage, my stuff.
When you come over, I'm not going to tell you which chairs they are. We cleaned them, okay?
Promise?
Yeah, promise.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Volatile session, tech shares leading the equity market higher, and this update brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. S&P 500 index up right now by 13 points, up 0.3%. NASDAQ Composite Index up 36, up 0.2. The Dow down 53, drop right now of 0.1%. We do have the NASDAQ 100 index up now by 0.8%. That index on track for a record. Bitcoin continuing slide today, falling for a fifth consecutive day, slipping below 57,000 for the first time in October. In a retreat from records right now, Bitcoin is at 57,891. Bitcoin today down by 3.7%. 10-year yield 1.58%. Spot gold down 0.5%, 18.58 the ounce. West Texas Intermediate crude up 0.8%, 79.01 a barrel. Cisco after earnings down 6.3%. Cisco weighing on the Dow. Again, the Dow is down by 0.1%. Also after earnings, Nvidia up by 8.5%. Cannot ignore Macy's after earnings today, up 22.1%. Kohl's rallying 10%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the new issue of Bloomberg Business Week magazine, it is out. It's on the Bloomberg at businessweek.com, also on newsstand. And the cover, it's all about inflation. Yep, it's back. Several articles covering what is one of the most talked about subjects this year, including a story by Bloomberg News cross-asset reporter and Bloomberg Quick Take host Katie Greifeld, which is about getting inflation right as a make-or-break trade on Wall Street. The folks on Wall Street have had a hard time figuring this one out.
Joining us now is Joel Weber, editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. Katie Greifeld is in the studio with us. She's Bloomberg News cross-asset reporter. She's also the co-host of Bloomberg Quick Take Stock. It airs each and every day at noon Wall Street time. Joel, I want to start with you and just talk a little bit about the entire package here, because this is a special issue of Bloomberg Business Week that really focuses on inflation. And I think for a lot of people, they might think back to the question of, wait a second, wasn't inflation dead just a few years ago? Were we out of the era of inflation?
In fact, we even had a cover story that was, is inflation dead? Which was, in the before times, and boy, is it not now. But this has been an obsession in finance and on Wall Street for years. This idea that inflation, which basically just disappeared, like what was going to bring it back, and then all of a sudden it's back and back in a big way. So we tried to look at that from as many different angles as we could. There's historical elements. There's the political ramifications and what it means for President Biden, who really doesn't have that many options to even attempt to deal with it. And then where Katie fits in with technically the cover story, which is a joke between her and me, is that careers are going to be made or broken over this thing, and especially on Wall Street in terms of who's doing what their calls are, what their trades are. So Katie, what's that angst feel like on the street?
Well, Joel, technical cover story, I will take it. I do remember the inflation is dead cover as well. I think there was a deflated dinosaur on it. I had an article in that one.
With a question mark, to be clear. It was a question mark, not a statement.
Dinosaur.
Wasn't the cover.
There is a dinosaur that was out of, inflatable dinosaur that was out of air at the bottom of the question.
There it is. I remember that
We're
well.
showing it to everybody who's watching right now on YouTube. Great cover.
Ah, man, 2017, what a time. But this article, I think there's sort of an optimistic or a silver lining here, because we're looking at it from the psychology of money managers, this inflation question. I feel like we come at it from the economic angle a lot, trying to answer the question of whether inflation is transitory. But if you're a money manager, this is the question you have to answer in designing a portfolio. And if you're wrong, for sure that can destroy your returns. But if you're right, you can really be a hero here. You can really make a name for yourself. So there's a little bit of an optimistic bent there.
Katie, though, here we are. You and I anchor this show on Quick Take that's geared toward retail traders. A lot of our audience hasn't ever lived through an inflationary environment. And
Yeah.
I wonder what your sources told you about the idea of us entering a time when, you know, we were, I think in the words of Matt Miller, this was like pre-Nirvana is what he said earlier today. Pre-Pearl
did.
Jam.
Sounds like Matt Miller.
I think that's what he said.
Yeah, that was a fun interview. But yeah, I mean, we're talking about numbers that we haven't seen since 1990. If you think about headline inflation, if you think about core PCE, which is what the Fed likes to look at, I mean, a lot of money managers that I talk to, I mean, even if you've been managing money for 15, for 20 years, you haven't seen these numbers in a long time. And I mean, myself, as a millennial, I know a lot of people who casually trade in the market. I mean, when they came into being, started, you know, paying attention to trading stocks, all they've really known is super low interest rates, tech dominating everything. There's a potential for a real reshuffling of leadership here, which is a really interesting time to be alive.
And so, Katie, when we're talking to people who are attempting to like navigate how they construct portfolios around this, and this feeling like, as one guy said, it's like if I get this wrong a year out, like I'm kind of screwed. I have to get it right. How existential is this for people? Are they feeling it with every decision that they make, and how far out are they even attempting to look?
Well, if you're looking 2 to 3 years out, and you know you think this is just going to be an issue, maybe you know inflation will peak in February 2022 and start to cool off. If you're looking 2 to 3 years out, you're probably not that stressed about it. You're still going to be, you know, looking for the best companies, et cetera. But if you think that this really is, we're going to see a sustained spiral upward in inflation, maybe driven by wage pressures, you're probably nervous here. And I spoke to Michael Scholl for this piece. He's the CEO of Market Field Asset Management, super smart. He said the real risk here is that basically bond investors reach a psychological breaking point when it comes to real rates, because real rates at record lows, deeply negative. At a certain point, you start to demand more, and you know this starts and ends with the bond market. If that starts to happen, you start to get cracks where the bond market isn't necessarily taking its cues from what the Fed is saying. That reverberates across assets. That has, you know, really wide-ranging, not very good implications for equities.
I'd say for sure. What about what the Fed does and how that will impact this?
That's the question, and this is something that I was talking about with Matt Miller. That you know, you think back to Volcker, who hiked rates to 20%,
which kind of went against the thinking, right?
Yeah.
Like, why would you do higher rates in a high rate environment? But that's exactly what was needed.
Absolutely. I mean, I can't imagine a Powell Fed doing that. I can't imagine a Brainerd Fed doing that. I mean, this current regime of Fed policy, we know that they want to let inflation run hot for a while. And I mean, even if you look at what's priced into markets right now, the terminal rate is priced in at 1.75%. That's a pretty shallow hiking cycle that's priced in. It's far cry from 20%.
So what's at stake here for the folks you talk to on Wall Street about the ones who are going to make or break their careers?
Well, again, to bring it back to Michael Scholl, he said that, you know, if the worst case scenario is right, that absolute psychological breaking point, this wouldn't be a 5 to 10% correction and then we bounce back. This would be a market of significant losers that wouldn't be winners and losers.
Wow. Right. There's the likes of somebody getting it right. And for us, for like the next 5 years saying, remember he made or she made that great call.
I mean, Michael Burry is proof. We talk about him all the time.
That's right.
Big Short fame came to prominence during, you know, the last financial crisis.
How many years ago was that?
A long time ago.
And he did just end his bet against Tesla.
Yeah, he sure did.
Anyways, great stuff. And the whole takeover, that the section devoted to inflation in the magazine, must read, really looking at it from so many different angles. Katie Greifeld, thank you so much. Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor here at our Interactive Broker studio. And of course, Jill Weber, editor of Bloomberg Business Week on the Access line from Brooklyn. Check out that new issue of Business Week on newsstands, online, and on the Bloomberg. So much to come. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Thursday, November 18th. We've got the Dow lower, the S&P, NASDAQ. They're both advancing. NASDAQ 100 index heading for a record 10-year yield right now, 1.58%. Bitcoin is down 3.6%, 57,952 right now on Bitcoin. Tech shares leading the equity market higher in a volatile session ahead of tomorrow's options expiration, which is forecast to be the second biggest in recent history. Nvidia shares rallying after earnings. Nvidia up now by 8.5%, but heading the other direction after earnings. Cisco Systems, Cisco weighing on the Dow. Cisco lower now by 6.1%. Initial jobless claims edged lower last week, setting another pandemic low, 268,000, far cry from last year when the pandemic broke out, the economy shut down, and jobless claims were running in the millions. As for the broader economic backdrop, Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
If you look at all the data we've been getting, whether it be on the employment front or retail sales, it's been gangbusters, right? So in that context, you should see as the U.S. economy starts to reopen for business, yes, people aren't getting into their business clothes and going into work, but it will happen eventually when infection rates start to come down.
Subhadra Rajappa of Societe Generale. She mentioned retail. Macy's posted stronger than expected results for the third quarter. It also raised its full-year earnings guidance. Macy's shares surging now by 21%. Also reporting this morning, Kohl's Corp. It posted sales that beat Wall Street expectations. Kohl shares up now by 9.6%. Among some of the names scheduled to report after the close of trading today, Applied Materials up now by 1%, Nuance Communications up 0.1%, and Intuit down 1.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Massar live in the Bloomberg Interactive Brokers Studio in New York. Bloomberg Business Week is brought to you by SEI, Visionary Asset Managers. Find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS.
All right, so we love the ticker. We love the company. We're talking about Petco Health and Wellness, which reported earnings this morning.
I thought you were going to go woof, woof.
No.
That's the ticker.
It was a third quarter beat for earnings, revenues, and comp sales. Outlook from the CEO, Ron Coughlin, saying the third quarter comp sales growth to 15%, giving them confidence to raise guidance for the full year of 2021. Even so, investors not impressed. The stock down, hovering near lows, down about 12.5%. So great to have back with us in our Interactive Broker Studio, the chairman and CEO of Petco, Ron Coughlin, joining us. Good to have you here.
Great to be here. Thanks for having me.
Well, talk to us about the quarter. It seemed like a pretty good one.
Yeah, I mean, we had a great quarter. If you look on the top line, we were up 15%. We passed it through on the bottom line, up 17%. If you look on a two-year basis, very strong. If you look at our digital business, up 30 plus. 150% on a two-year basis, which is one of the strongest prints in terms of digital business of any retailer. We're gaining share in a growing category. And also we added $53 million of gross margin year over year.
That's significant.
But from a gross margin rate standpoint, there was three dynamics. One was we sold more consumables, food and treats, versus supplies, and I can explain that more.
We'll go there right now.
Okay, all right. So basically, let's talk about a pet's lifestyle. Yeah. Year one of a pet. So first of all, there's been a question, do people spend more year one and then down in year two? It's common all through the pet's life, with the exception of end of life, where you have more RX and more veterinary bills. But it's year one, year two is the same, but the mix is different. Year one, you get your crate, you get your bed, you get your leash, your collar. Year two, the pet's put on, in my guy's case, about 30, 40 pounds.
Right.
And guess what? The bowls are bigger, the fill is bigger.
Crate's bigger.
So what happens is the food versus supplies mix is adjusted. This is amplified because of the 2020 pandemic puppies. And so we had a mix towards consumables. The second thing that happened was we had basically 2x the share gain we had a year ago because we're able to get our hands on supply and the other programs we're doing.
So do you think that that shift toward consumables indicates that the pandemic pet boom is over, that we will not continue to see the growth in people actually buying new pets and as a result buying more from you?
First of all, we prefer adopted versus buy.
Okay. Yeah, adopt. I'm sorry.
Sadly,
we adopted our cat. I should say we adopted our cat.
I wasn't picking on you. It's just with our Petco Love, we support all the rescues, and we're trying to eliminate pet euthanasia, which unfortunately still exists.
Yeah.
But actually, adoptions are still at an elevated level. They're just not the exact same level as 2020, which was the planets aligned at 2020. But it's still at an elevated level. But the second thing that we now know is millennials and Gen Zers adopted a lot of those pets, and guess what they do? They spend more. So spend per pet is going up. So from an industry standpoint, the industry went from a prediction of 6 to 7% from 21 to 25 to a prediction of 7% for those years. So the industry is going to be strong, and we're gaining share.
So what would you say to investors like, oh my God, you've got it wrong today?
Yeah, I would say we have a great category. We're gaining share, and there were some unique dynamics between 20 and 21 that are playing out in the gross margin. But in this market, where you have consumers wanting to spend more, the main thing is the gross margin dollars, not the rate, because we got 53 million more gross margin dollars, and we flowed to the bottom line ahead of our top line. So I think that we're executing very well in this market.
What's the outlook from here? And we've got to ask you a little bit about supply chain. I mean, we ask everybody, and I'm sure you've been asked a million times here in this latest quarter. What's your supply chain like, Ron?
Yeah, well, first on the outlook, we raised our guidance. So it's our third consecutive beat and raise. And early Q4 is strong, and that's what we said today. In terms of supply chain, from our standpoint, we only have about a third of our revenue, 30% of our revenue that is exposed to international supply chains. The remainder of it is domestically sourced or services. We have less exposure to that issue. Right. But that said, we're moving on to new carriers that have capacity, new ports that have capacity. So our supply chain team is doing a great job being nimble.
Because it has to be nimble, because it's strained?
Because you look at Long Beach, right? There's lots of conversations about Long Beach. But at the same time, we got enough supply to, grow 15%. And if you ask me, our consumable strength, we got, more than our fair share of supply.
What's the port you're using that's not as crowded?
There's Northwest ports, there's Texas ports, so we're being creative as we wherever there is capacity.
All right.
That's being nimble. Go ahead.
Yeah, I just want to ask one more on margins, because we saw a few different stories play out, especially with Target and Walmart this week, sort of absorbing those costs rather than passing them on to consumers. How are you thinking about it right now?
Yeah, so we have a highly inelastic category. We have the highest spending pet parents in our portfolio. So the way we see it is we have offerings for every consumer. So if you want a high-end fresh frozen, we have it. If you want a premium, you want a value, we have a great value in our own brand, Wholehearted. So we make sure we have an offering for everybody, but at the same time, we are able to pass through a lot of that pricing.
Hey, what about getting workers to be able to man your stores? How tough is that?
Yeah, well, in the last year, we had double-digit increases in wages. Our bonus we just paid out was 40% above target, because the mantra is, as the company does better, our employees do better. And we've done a lot of things, and in return, what we're seeing is our retention amongst our pet care center, our store employees, full-time employees, is above 19 in terms of retention. And actually, believe this or not, we had a 40% increase in applications versus the beginning of the year. So we feel good about how we're heading into the holiday.
So you have all the workers you want?
We feel good about how we're heading into the holiday. It's a tight market.
Yeah.
But as I said, our applications are up 40%. So.
All right. We got to run. Thank you so much. Always appreciate it. Yeah, always great to have you. Ron Coughlin, of course, he is the chairman and CEO of Petco, joining us here in our Interactive Brokers studio. You are listening to Bloomberg Business Week. What?
I was going to say woof woof.
All right. It is a great ticker. Come on. All right, let's get to world and national news. Over to Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Thanks so much, Carol. Travis McMichael has been taking questions today from prosecutors. He's one of the 3 men accused of fatally shooting black jogger Ahmaud Arbery. Cobb County prosecutor Lynn Dunikowski walked McMichael through 3 instances where he urged Arbery to stop so he could talk to him.
You pulled up to him once. He doesn't want to talk to you. You back up. He doesn't want to talk to you. You pull down Burford. Your dad's yelling, cut him off, cut him off. And all of a sudden, he runs back. He doesn't want to talk to you. That's 3 times he's demonstrated to you that he does not want to talk to you, correct?
Yes,
And he's also demonstrated he's no threat to you. He hasn't pulled out a gun.
that's correct.
He hasn't said one word to you.
He has not.
He's not threatened you in any way, verbally or physically.
No, ma'am.
No knives.
No knives.
Dunikowski asked why, if the police were called, he felt a need to still chase Arbery. McMichael testified yesterday he shot Arbery in self-defense, saying he attacked him and grabbed his shotgun. The jury at Kyle Rittenhouse's trial is deliberating for a 3rd day with a new defense request for a mistrial hanging over the politically and racially fraught case. The judge in the trial has banned MSNBC from the courthouse today after police said they briefly detained a man who had followed the jury bus and may have been trying to photograph jurors. He is a freelancer for MSNBC. Thanksgiving dinner is going to cost Americans more. A survey by the American Farm Bureau Federation found the price of Thanksgiving dinner is up 14%. Dinner for a family of 10 will cost $53.31 on average. Turkey saw the sharpest price increase. It was up 24% from last year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. So a lot to get to and a bunch of corporate news continuing to cross the Bloomberg. A story earlier today about CVS Health. They're going to plan to close 300 stores a year over the next 3 years, take a charge of as much as $1.2 billion, part of a plan to decrease its store density in some areas.
Yeah, really interesting number here. The reduction represents about 9% of CVS's current 9,900 store footprint. This is part of a strategic review. The pharmacy is going to create 3 new store formats designed to increase interaction with customers. This is what CVS said in a statement earlier today. Now, Carol, part of the goal is to balance the type of stores needed in different locations, including ones that offer primary care services, a key part of the business that CVS is increasingly moving into.
Well, and I guess stores, as they expand, move into neighborhoods, right? At some point, they probably have to look and evaluate, okay, what are the most productive stores? What makes the most sense? Because I think we kind of used to laugh about Starbucks, right? There was one on every corner, and maybe at some point you start to eat into nearby, Starbuckses. I'm just throwing that as an example. You could see this being studied in business school, and you do wonder, CVS must be looking and saying, okay, what of our outlets are the most productive, most profitable?
I also wonder about the changing role of what people see as a pharmacy, not just because of the COVID-19 pandemic, but because of the changing relationships that people have with
You would think that they would
primary
want
care.
more.
You would, but at the same time, I think that they are understanding that people are using CVS's for more than just as pharmacies, right? They're buying food there, and increasingly, think about where you got where I got my shot, right?
People go there for COVID shots, for flu shots, for other things.
And other primary care services. And you have to think about the Aetna relationship as well.
Yeah, so it's interesting. Our Bloomberg Intelligence healthcare industry analyst, Jonathan Palmer, called the update a positive look at the company's multi-year transformation ahead of its December 9th Investor Day. So we could expect to see more when it comes to what maybe the company is talking about, its transformation. Let me just do a quick check on what the stock is doing in today's session. It's up about 3% here, so investors certainly responding positively to it. The stock is up 40% so far here in 2019, so definitely on a run. You're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I would say even more.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ 100 Index on track for a record amid a rally in big technology shares. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed today in a choppy session with the Dow currently down 59 points. S&Ps are higher by 15. You mentioned NASDAQ, it's higher by 52. The U.S. 10-year yield at 1.59%. Gold is down 9. Bitcoin sinks 3.7%. And among the main 11 SV sectors, leaders were consumer discretionary and tech, while utilities and staples were under pressure. Leaders to the upside in the Dow, Apple and Home Depot, while Cisco fell 6.3% after earnings and led to the downside. Also after earnings, NVIDIA rose as much as 12% to a record. And in other news, Apple jumped intraday on a report they are aiming for a fully autonomous car by 2025, and Sweetgreen opened at 52. The IPO was priced at 28. Wrapping things up, Applied Materials, Intuit, Palo Alto Networks, and Workday all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you, Bill, and to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Right, Charlie, thank you so much. So retail definitely front and center. Americans are out there shopping, at least at Macy's and Kohl's. Both stocks soaring in today's trade. Both beat third quarter sales expectations and both raised full year outlooks. Macy's, Tim, is up roughly 227% so far this year.
Wow.
Kohl's is up about 49% this year.
Well, let's get to it with Jordan Holman, retail reporter for Bloomberg News. She joins us on the phone from Atlanta. Jordan, I want to start with Macy's. What did we learn in the company's most recent earnings report that's really got investors so excited?
So Macy's posted a stronger than expected earnings. So sales were very strong this past quarter. And I think investors also got excited about their new strategy around digital. So today, Macy's announced that they would launch a digital marketplace. So highly curated products and then also third-party products. And this is a trend that we've seen in retail, very specific about the type of products that you're marketing to folks. And it looks good. So Macy's has done strong on this. And the last thing I would say is that people are closely watching inventory levels going into the holiday season, especially with all the concern about supply chain. And Macy's showed that they're in a good position.
Macy's has been on a tear this year. As I mentioned, up more than 200% here. They really got lost in kind of the old ways of doing retail for a long time. It sounds like they've really awakened and are really embracing digital. You mentioned, is it all about that really going forward and the growth that they're seeing?
Well, Macy's has also had some encouragement to get more into digital, and not just from consumers starting to shop more mobile and digital. But think about activist investor Jana Partners earlier this month. They have pushed Macy's to consider spinning off their e-commerce business from their traditional brick and mortar business. And that's really reinvigorated the conversation about how valuable a digital side of a retail business can be. So that was another news item that happened today with Macy's. They said that they have hired Alex Partners to help them evaluate that process to see if that's something that they would want to do.
That's interesting. I mean, Carol and I talked a lot about this last week when we talked about the end of the conglomerate. Mm-hmm. But why would we see, and what would be helpful to Macy's to separate these businesses? And I certainly understand the difference in growth, but can't you have, some quote-unquote synergies here? I mean, certainly in recent years, at least before the pandemic, we saw online-only direct-to-consumer companies start to open brick-and-mortar stores so they could get that in-person experience in places.
Look at something like a Zara, right?
Like a Warby Parker.
Right, exactly. That seemed to be able to do both.
Exactly.
Yes, and that's a really fair question because, like you said, the next move for growth for a D2C is always opening stores. So there's still something about a store that drives growth. In Macy's earlier today, they really emphasized their omni-channel strategy, the fact that when you have a brick and mortar store in a certain zip code, they see digital sales go up. So they are tying the connection between that. And when I was talking to Macy's CEO Jeff Gannett earlier today, he said, we looked at this before. This is not new for us, considering if we should split off the business. But because of the high valuations that we're starting to see when it comes to e-commerce, you look at Saks Fifth Avenue, they spun off their e-commerce business. That he said they're doing their due diligence to see if that is actually the right strategy.
But what's left? What's left for the brick and mortar if you spin off e-commerce? Like, how do you have that division of a Macy's brand, one being e-commerce and one being brick and mortar?
You honestly would have to make sure you don't have silos when talking, because the way that we as consumers shop, we expect if we see something online, maybe we do want to go to the store and try it on. And if those businesses aren't connected at all, there could be friction, which is like the worst thing that a retailer would want. So it's kind of going back to the early 2000s when they were separate businesses for a lot of retailers, and that caused friction. And so it's interesting to see this conversation come back to see maybe it would be good for shareholders, but as consumers experience it, that might not be the case.
Okay, let's talk Kohl's, because it's another company that you cover. What did we learn about the company's most recent quarter and how they're thinking about the remainder of the year?
Kohl's also posted strong sales for this quarter. They raised their outlook. One thing that we did see that could be a concern for the rest of the year is that their inventory levels are down 25%. And even though they did want to work on lowering inventory, the Kohl's CEO told me today that that's not as low as they wanted to go. And part of it was supply chain issues. Women's apparel really took a hit. And so as you look into the holiday season, it just kind of adds to the concerns that people have about out of stocks. But they did say that items like home and toys, which are major during the Christmas season, are well stocked.
Right. Like if you walk into a Kohl's store and the shelves are empty or you can't find what you need, you're going to walk out and you're going to go somewhere else. And that means you're also going to maybe buy other things elsewhere. So those inventory levels are always key. Hey, Jordan, thank you. Bloomberg News retail reporter Jordan Holman in actually I should say on the phone from Atlanta, just looking at the S&P Super Composite Retailing Industry Group, some of those results from Macy's, from Kohl's, sending the overall group higher. It's up about 2.6% overall.
That inventory comment that Jordan made, it's particularly important given where we are in the holiday shopping season.
Just the
before
beginning,
Thanksgiving,
right?
At this point, yes.
Have you seen all these like pieces that are being done about different supermarkets or stores and retail because their shelves are empty? They're like trying to figure out how to fill out.
I did see
the
that.
shelves
Yeah.
And doing kind of creative things that they might
Did you get your shopping done?
I haven't even started.
Same.
We got time.
Yeah, we got time, right? That's what we keep telling ourselves.
All right, coming up next, we've got the chart of the day with Dave Wilson right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Getting ready for the chart of the day.
I'm getting ready for the song of the day.
Song of the day.
Dave Wilson just came in here. He's getting all set up on the Bloomberg terminal. We're going to bring that to you.
No clues on his face or nothing.
No, never. He's got a poker face, Carol.
You could come in with a tie that just gives a little hint, but no.
Nothing. You have to look at the chart for the hint.
All right, waiting patiently or not patiently is Charlie Pellet to give us an update on the trading day. Hey, Charlie.
Well, hello there. I'm waiting for Lady Gaga. Poker face.
Yes!
Yeah, exactly. But anyway, here's what's going on. We've got stocks trading mix. The Dow lower right now, S&P, NASDAQ, they are both higher right now. Big news, though, tech stocks leading the rally. Could see a record today for the NASDAQ 100 index, possibly for NASDAQ, and also possibly for the S&P 500 index. 28 minutes to go ahead of the close. Keep it locked into Bloomberg Radio to see how things shake out, and of course how Asian markets react tonight. Right now, the S&P up 16, up by about 0.4%. NASDAQ up 63. That is a gain of 0.4%. But the Dow on the minus side right now, down 54. Dow is being weighed upon by Cisco Systems. Cisco down 6.5% after earnings. The Dow is down 55, drop now of just about 0.1%. 10-year yield 1.58%. We've got gold down 0.5%, 18.57 the ounce, and West Texas Intermediate crude up 0.9 right now, 79.04 a barrel. Bitcoin slumping 3.6%, 57,943 on Bitcoin. Apple has chosen February 1st as the deadline for corporate employees to start their return to offices, a slight delay from its previous goal of January. The American Medical Association says more than 60 other American health organizations have endorsed the Biden administration's vaccine mandate for companies with 100 or more employees. Meanwhile, Dr. Chris Beirer, professor of epidemiology of the Johns Hopkins Bloomberg School of Public Health, told us he is optimistic about the promise of those antiviral pills.
Both Pfizer and Merck, with a California startup called Ridgeback, have put forward to the FDA new antiviral drugs. And these are the first that are really COVID-specific pills, don't need to be refrigerated, taken twice a day for 5 days, that can significantly reduce symptoms and can reduce hospitalization and death. Pfizer's looks really good, perhaps a 90% reduction in serious disease if you take it within 3 to 5 days of becoming symptomatic.
Dr. Chris Beirer with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. He mentioned Pfizer shares up by 1.3%. ADRs of its German partner BioNTech down 0.3%. ADRs of AstraZeneca down 1.9%. Moderna up by 3.6%. J&J down 0.5%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. This is Bloomberg.
Okay, so it took me a while to get there.
You got there, though.
Nobody in that glass control room helped me. I'm just going to put it out there.
Yeah, we're seeing some arms raised, some shaking heads, a thumbs up.
I love you, Paul Brennan. Our producer said Kenny Loggins was a good guess. Thank you very much.
It's in the neighborhood.
My heart peaked.
But I got to tell you, the guy who edited my chart, as soon as he saw the headline on it, he knew what the song was going to be.
Did he start humming it?
No, not exactly, but he sent me the YouTube link to the song.
I love that they do that. All right, so let's get to the chart. It's a good one.
Anyway, you know, it's funny because I was going through this report yesterday from Nick Collis over at DataTrek, and I had a 90s flashback. Remember during the dot-com era, how companies would find ways to get their internet units to go public. Walt Disney even did it.
I don't remember that.
Staples tried to do it.
Yeah.
Didn't work out for them. Well, no, Disney had bought a company called Go.com and then turned it into Walt Disney Internet Group, and they had a tracking stock.
Got it.
That tracked the performance of that business. So, I mean, I was just kind of struck when I read Nick Colas, who used to be an auto analyst, writing about, well, what if General Motors and Ford did initial share sales of their electric vehicle units? And what I was looking at is just, the market value of those companies compared to the value of Tesla and Rivian Automotive and Lucid Motors. Of course, Rivian, just been public since last week and, got to be the third largest automaker in the world by market value at one point. I mean, the stocks have kind of come down the last couple of days, so the chart focuses on the peak of market value, which was recorded on Tuesday. But, it kind of raised the argument. Well, I mean, it would actually help the automakers in a couple of ways. One, it would allow them to raise money to sort of bolster their EV operations. And the other is that it would give them a currency to be able to make deals in that business. So he's not figuring it's going to happen. In fact, he almost certainly doesn't expect it. He used those words. So, it's more kind of a thought exercise perhaps than anything else. But I'll tell you, I mean, it's definitely something that jumped out at me when I saw it and, had to turn it into a chart.
I also wonder about the labor issues that Elon Musk has battled at Tesla, like anti-unionization efforts there, and the way that American automakers such as Ford and General Motors do have very strong unions.
Right, and that means they spend more, that means they have bigger obligations, and that sort of thing you would think would figure into the valuation of these companies. Ford and GM have a whole lot more debt than Tesla. They have, a lot of legacy costs, that a company like Tesla or Rivian or Lucid, for that matter, don't have. So, I mean, it's understandable that there would be a gap in valuation. It's just that it's so wide at this point. It's like, what are Ford and GM going to do? It's like the market's telling them, hey, you may want to get into EVs, but it's not going to work for you.
It feels like it's so much of what's going on in our world. We talk about it with energy, going from carbon to alternative energy, and it's the same thing you're seeing. That's obviously a direct correlation in terms of what's going in the auto industry, right? It's kind of old technology that we've been seeing for years and years, and as we transition to alternative or battery-fueled cars, it's just a whole different world.
High hopes, and we'll see if they play out.
All right. Great chart. Amazing chart. Stock of the day?
BJ's Wholesale.
Really?
Yeah. We've been talking about a lot of retailers today. I haven't been talking about this one. Ticker BJ. I mean, they compete with Costco. They compete with the Sam's Club's unit of Walmart. And they had fiscal third quarter results out that were just fine. Earnings beating analyst average estimate in a Bloomberg survey. An unexpected increase in sales at locations open more than a year, revenue beating projections. They're buying back up to $500 million in stock. You put it all together, you're looking at the biggest gain in a year and a half. Shares hit a record today. They're up almost 20%.
Up 92% this year.
And the ticker is BJ.
Right, exactly.
Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Let's check out the world and national news. Nancy Lyons is in D.C. Hey, Nance.
Thanks, Tim. A cost estimate of President Biden's social spending bill could be coming in this afternoon from the nonpartisan Congressional Budget Office. It's expected to show a slightly higher price tag. The package calls for bolstering child care assistance, creating free preschool, and curbing prescription drug costs. House Speaker Nancy Pelosi says she's hoping the chamber could take a vote today on it, but as Bloomberg's Anne-Marie Hordern reports, the Senate, well, that's a whole nother issue.
When it comes to the Senate, this is where they're going to have a number of issues. Paid family leave, what's going on with SALT. There are going to be a number of issues that potentially the president is going to have to start whining and dining a lot more senators in the weeks ahead.
Again, Bloomberg's Anne-Marie Hordern. As expected, a New York judge has tossed the convictions of two men who spent decades behind bars for the 1965 assassination of Malcolm X. Prosecutors and the lawyers for Muhammad Aziz and the late Khalil Islam said a renewed investigation found new evidence the men were not involved with the killing and that authorities withheld some of what they knew. Oklahoma Governor Kevin Stitt has stopped the execution of Julius Jones just hours before he was scheduled to be put to death. Jones has long maintained his innocence and says he was framed by his co-defendant. Some lawmakers are urging the Biden administration to impose a diplomatic boycott of the Beijing Winter Olympics over China's human rights abuses. The president was asked about it today.
Something we're considering.
The diplomatic boycott means the U.S. would not be sending a delegation of government officials. Global News 24 hours a day. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stedovic. So this story is trending high. It's among our most read on the Bloomberg terminal. Apple pushing to accelerate development of its electric car and is refocusing the project around full self-driving capabilities, according to people familiar with the matter, aiming to solve a technical challenge that has bedeviled the auto industry. Mark Gurman out with another great story.
Yeah, also Apple shares moving higher on this news. For the past several years, Apple's car team had explored two simultaneous paths. One was creating a model with limited self-driving capabilities focused on steering and acceleration, similar to many current cars, or a version with full self-driving ability that doesn't require human intervention.
Apple shares up about 3.25% on this news. This is an exclusive from our Mark Gurman. And so it's interesting. We've heard Apple talk about a car for a while, right?
Yeah.
And we've had conversations with Mark about they're doing it, they're not, or where are they?
Or I should say, we analysts ask a lot about it, and there's a lot of really good reporting. What Apple tells us is not so much.
Yeah, exactly. And so, as Mark reports, in trying to master self-driving cars, Apple chasing a holy grail within the industry. Tech and auto giants have spent years on autonomous vehicles, but the capabilities have remained elusive. I will say it a million times. I can see how it would work on highways. I feel like my car, a lot of cars already on the road, basically can drive themselves on a highway. You can see how it works. It gets, I think, a little bit trickier when you're talking about riding around town. I mean, in New York City, I think it's difficult.
One thing I think about a lot, Carol, is infrastructure and the idea that infrastructure, for years we've heard this from people who think a lot about this stuff, infrastructure has to be able to communicate to a certain extent with the vehicles that are on the road. So there has to be a way potentially for these cars to interact with other cars that are out there, for the idea of knowing where one car is versus another car, interact with stoplights and streetlights and understand parts of the city that you're in.
Yeah, absolutely, right? There's such a huge infrastructure component to it, right? And so that when technology is making a decision between where to go or to avoid hitting something or someone, what is the technology required to do that? I don't know.
I laugh because infrastructure's tough.
It is. I've heard it's hard. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Sweetgreen doubling its value in its trading debut after raising $364 million in its IPO. Priced above a marketed range right now. Sweetgreen shares, it's a salad chain. Sweetgreen up 81% in its first day of trading. Lots of green elsewhere on the screen, with the S&P up 18 right now, up by 0.4%. NASDAQ up 79, up 0.5. The Dow, though, on the minus side, down 46, drop there of 0.1%. Tech shares leading the equity market higher in a volatile session ahead of tomorrow's options expiration, which is forecast to be the second biggest in recent history. Right now, we have got the NASDAQ 100 index pushing higher at a record, up 1.2%. NASDAQ Composite Index at a record, up 82, up by 0.6%. S&P up 19, also on track for a record, up 0.4 right now. The Dow on the minus side, down 44, drop there of 0.1%. Cisco after earnings down 6%. Cisco weighing on the Dow Jones Industrial Average. Apple jumping after Bloomberg News reported the company is pushing to accelerate the development of its electric car. After earnings, Macy's and Kohl's both surging. Macy's up 21%, Kohl's up by 10.4%. 10-year yield 1.58%. Gold down 0.4. Crude West Texas Intermediate up 0.8%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Truck drivers play an essential role in the U.S. economy. Unfortunately, not enough workers want the job. Industry analysts say there's a shortage of 80,000 drivers, a record high, and expect that number to double. Maybe it's time to let robots take the wheel. Shipping stalwarts such as Walmart and FedEx are already investing heavily in autonomous trucks, and startups are putting promising new technologies on the road. If these efforts pan out, they could transform the trucking industry. A McKinsey analysis estimated that automation could reduce logistics costs by 40% and operating expenses by 45%. For consumers, that should translate into quicker deliveries, cheaper goods, and more reliable service. And automation could create tens of thousands of new jobs. In time, robot drivers should become an unremarkable feature of the Great American Highway. It can't happen too soon. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 minutes left in today's trading session. And will it be another record for the S&P 500? That would make it, I think, 66 for the year overall.
Who's keeping track?
I am. Or the NASDAQ 100, too. We could see another record there, really propelled by NVIDIA and some of those tech names. But quite a bounce back that we've seen in today's trading session when it comes to equities. We are well off our lows of the session. So let's get to it with our guest. Christian Manafo is with us, CIO over at Liberty Street Advisors, portfolio manager of the Private Shares Fund. It's a closed-end interval fund investing in private, operating, late-stage, venture-backed growth companies. He is with us on the phone in New York City. Christian, how are you?
I'm doing well. I hope you guys are having a great day.
Great day because we're almost at Friday. I'm going to be in lunch with you.
We're loving it.
We're loving it. Investors kind of loving the trade. I mean, at least they're dragging it down, or dragging it back from some of its lows today. What is it about the market environment right now, the financial market environment, that you find interesting?
Well, there's the market we play in particular, which are the private markets. We've just never seen this level of demand from all investors, including public market investors. And if we really try to deconstruct that demand, which is also flowing into the public markets, there's just so much demand for, disruptive technology and innovation. On one hand, we know that this works, favorably. On the other hand, it works, in a more challenging way. What I mean by that is, this surge of demand in our market, at least, is attracting investors who traditionally have not been active here. And some of them have been driving up certain valuations while also providing opportunities for certain companies to go public that we would argue, may not be ready to be public, right? So there's premature opportunities for some of these private market companies to go public, and we're seeing all types of volatility. But that said, overall, we continue to see a lot of robust businesses that are growing in the private market and that are doing quite successful.
Okay, so
public market companies.
So explain exactly how investors can access this. Even if it's been difficult for accredited investors to get into these types of companies, like how can an investor actually get into the private shares fund?
Yeah, so our objective in creating this fund was to democratize access so that not just large institutional grade and high net worth investors can be able to access all this private market innovation and growth, but also that an investor with as little as $2,500 without accreditation can access it. And so we have a fund, as you said, that's structured as a 40-act interval fund. It trades with a ticker. The ticker, you can look up as PIIVX. And, with this ticker on a daily basis, we provide investors the opportunity to, invest in our fund. It provides, we believe are a lot of inefficiencies compared to traditional private market strategies, one of which is the ability to democratize the access. We also think there are cost efficiencies. There's an evergreen nature, so investors don't have to worry about investing every few years to stay in touch with our best, ideas. So it's a really disruptive fund structure. It's available on most platforms, and we're offering it at what we believe are very attractive economics.
Help me understand something. It looks like your biggest holding, the Goldman Sachs government fund, it looks like you've got a lot of cash or a lot of assets in cash or cash-like investments. Is that because it's hard to find opportunities? I mean, I guess I'm trying to ask, is that normal, indicative of pessimism about the outlook, or indicative of that there's nowhere that makes sense to put that cash right now?
Yeah, no, our fund right now is sitting a little over $700 million in AUM. The vast majority of that is invested. We actually have a smaller cash position. The way the private markets work is you can't just press a button and buy the assets you want to own. Mm-hmm. So we have contractual obligations against a lot of the underlying deals that we invest in because private markets are nowhere near as efficient as the public markets.
Right.
So it could take, weeks or months to execute on private market opportunities. That is where a lot of the attractiveness comes in, right? Because there is a lot of asymmetric information and an efficiency that we can, one, take advantage of, and two, offer that, to our investors. But the majority of our AUM is currently deployed across a portfolio of nearly 80 positions.
What companies are attractive to you right now, not just in the portfolio, but outside of the portfolio?
Yeah, I mean, when we think about, sector themes, obviously the space economy is an area of substantial interest. We think this represents a compelling opportunity. And there's a lot of historical advancements in terms of cost efficiencies, as we're seeing, as well as, more safe ways to get payloads up there. Financial technology is an area, obviously, that's disrupting all aspects of our life. We haven't gotten incredibly deep into the blockchain crypto world yet. We're still, being cautious there, but we do think there's a lot of disruption. We've been actively playing a role in payments and reinventing how lending and personal finance work. Cybersecurity, we think, is a very attractive area for obvious reasons. Healthcare innovation, the ability to provide various digital health solutions. Cloud technology, if we think about what it's called, generally data gravity, which is simply the amount of data created far exceeds the bandwidth that allows us to process it. And when you have all of this cloud migration to, off-premise, hybrid, or even on-premise, there's a lot of challenges with the interoperability of the applications and the security. So there's a lot of technology that's helping that work.
Right.
We think agricultural technology is really attractive. So without naming specific companies, we really think there's a lot of innovation that's happening, and we're trying to provide that to our clients.
But 23andMe is one that is certainly of interest, correct? And the reason I bring it up is Business Week recently did a story, and it's not just about, figuring out your ancestry, but it's also them being able to collect data and then ultimately use it to develop healthcare. Is that of interest to you? And just got about 30 seconds, forgive me.
Yeah, it is, and that's a position that our fund has held. I think where you're getting at is this is becoming more of a genomics play, right? And a lot of the pharmaceutical companies can use this data really help create a lot of different solutions using the research they can apply with this data. So yes, that's absolutely a very interesting name.
All right, got to run. Really fascinating, and I hope you come back soon. Really appreciate it. Christian Manofo, he is Chief Investment Officer at Liberty Straight Advisors, Portfolio Manager of the Private Shares Fund, and very interesting to hear about some of the areas that he's finding. The ticker, by the way, PIIVX.
Aerospace, fascinating.
Aerospace.
Getting the satellites up there.
Yeah, absolutely. And it feels like I'm, talking to almost Kathy Wood
Yeah,
in
yeah,
terms of
you're
some of
right.
the ideas. All right, folks, just got a few minutes left in today's trade. It's time for Beyond the Bell. Let's cross over to our TV team where we'll cut you down to the closing bell on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell, and here to help take us beyond the bell. Our global simulcast, Carol Master and Tim Stenovic, bringing together our audiences across Bloomberg TV, radio, and YouTube. Carol, looking at S&P 500 higher on the day, but again, you're talking about more than a third of the stocks, more than 2/3 of the stocks, are in the red.
Yeah, so it's kind of not an all-in at all in terms of the trade. A bit of a struggle here, but nonetheless, I am wondering, will we ultimately get a 66th record on the S&P 500?
Ooh.
NASDAQ 100, too. Will we get a record thanks to the likes of NVIDIA and some other names, Tim?
Okay, so a good day for the S&P 500 and the NASDAQ, but another bad day for crypto. It's the fifth straight day of declines for Bitcoin, slipping below $57,000 for the first time since October, down about 15%, Caroline, from the record high that was reached just over a week ago for Bitcoin.
And it's interesting where the correlations live for that, because we're starting to see a breakdown. They'd been seeing whenever big tech did well, or indeed tech and growth did well, so too did crypto, disassociating itself perhaps from the rally that we're seeing in the NASDAQ. But notable also, it's not getting much of an inflation hedge bid on the day either, Taylor.
And interesting, we've talked a lot about the equities and the bonds. One thing I failed to do at the top of the hours that we usually do is talk about some of the economic data as well. The jobless claims, Caroline showed a little bit of a hint of moving in the wrong direction. But overall, the economic data up to this date has been strong. The economy has remained strong. The consumer, Romaine, we're learning from these earnings, has remained strong.
And we should point out, too, you talk about some of the sideways action. There's so many catalysts up ahead here. You got a potential decision, I guess, on the Fed. Let's just call it a decision, not necessarily a change, but that could affect monetary policy. No matter who's in the Fed chair seat come next year, you're talking about a normalization of policy. You got a lot of fiscal policy issues, a lot of geopolitical issues. If you're an investor and you're sitting on 70, 80% gains in some of your holdings, now might be the time, right?
Hey, taxes, though, capital gains taxes on those?
What are you going to do it ahead of 2022?
I guess so.
All right, well, let's get you caught up here on the closing bells. Dow Jones Industrial Average going to finish the day in the red, down about 0.2%, or about 60 points here. The S&P 500 going to close out the day right around 47.05, let's call it. That is a record high here on the day, 66 the year, according to Carol's count there, up about 16.3%. The NASDAQ Composite also going to close at a record high, 15,993, and the Russell 2000 really just didn't get any traction today. Going to finish the day down about 0.6% here at 2,363 and change.
All right, I'm listening today, so I'm not going to repeat what's going on with the small caps, Romaine. I'm just going to let you know that. But what's interesting is the amount of records that we have seen this year, and the momentum, even though it was kind of a bouncing around trade here. S&P 500, though, as Romaine did mention at the top, 168 higher, 336 lower. So overall, you're seeing a lot more of a risk-off trade in today's session, Taylor.
Yeah, Carolyn, you can really see that on a sector level as well when you take a look at the composition of the S&P 500. For our radio audiences, we do on the charts, it's green and it's red, but there's some red even in the winner's circle here. And I have to say it's two themes. It's chips and retail. So basically your NVIDIA, Macy's, and Kohl's are doing pretty well. Those are the two sectors that are up about 3% on the day. Really, really strong earnings from those companies. You take it down to the bottom and it's an unwind of the defensiveness, right? Utilities, household products, food and beverage, and some telecoms off about 0.7%.
All right, let's get to some of the gainers. I thought you were going to say it was about chips and kale, because Sweet Green, man, off and running in today's session, doubling at one point by the end of the session in its first day as a publicly held company, up about 76, 77% here, 49 and change here. Coming out, upsizing its IPO, sold above the IPO price, but it's pretty amazing to see this IPO just strong out of the gate. Mention retailers real quickly. That was definitely on our radar today. Macy's, Kohl's among them, really rallying. Macy's up about 21% here. This is after the company, in terms of the third quarter, stronger than expected results, raising its full year guidance, and strong consumer demand going into the holidays. And I do want to mention NVIDIA. That was really so much strength for the technology trade today, up about 8.25% here at the close. The company reporting a strong third quarter, boosting its sales outlook for the rest of the year, and that stock hitting a record, certainly in the trade today, Tim.
All right, you got the gainers, I got the decliners. Let's start with Cisco, leading the pack at the bottom when it comes to the S&P 500, both on a percentage basis and on a points basis, down 5.5% on the day today. Shares falling after the company gave a lackluster revenue forecast for the current period, hurt by a shortage of components. That makes it difficult, the company says, to keep up with demand. Cisco's executives say they expect this part shortage to last until the second half of the company's fiscal year. Cisco also dragging down the Dow today. Shares of Petco slumping the most since its January IPO, down more than 13% today. It was a really solid quarter for the company. You guys spoke to Ron Coughlin. We spoke to Ron Coughlin on Bloomberg Radio as well. They beat on the top line, the bottom line. They boosted their outlook. Gross margin, though, was the issue that came in slightly below consensus due to supply chain costs. Coughlin told us that the company is getting creative when thinking about supply chain challenges, especially when it comes to ports, and actually, Romain, going to different parts of the country with their goods. So checking out ports in the Northwest rather than in California, and then also in Texas as well. Rivian, lower on the day,
All
too.
right.
Down
We got a lot of earnings crossing the wire right now. Just going to get to Applied Materials real quick. Those shares down 6% here in the post-market. Their fiscal fourth quarter numbers here not looking great here. They missed on adjusted EPS, $1.94 versus $1.96. The street was looking for on revenue, $6.35 billion. AMAT gave them $6.12 billion. So a miss on that. Here's your forecast here. 1Q net sales, fiscal 1Q, $6.16 billion plus or minus $250 million. And as far as the EPS numbers go, 178 to 192. The street was looking on average for 197, guys.
All right, so we're seeing shares of Applied Materials down about 6.2% in the after hours. Let's go to the retail side of things because Ross Stores coming out. We've seen some really strong performance from Macy's and Kohl's. They really rallied in today's regular session. Ross Stores, though, out with their third quarter EPS. It's a big beat, folks. $1 to $9 a share, $1.09 a share. The estimate was for 78 cents a share. Talking about the outlook, fourth quarter EPS 83 to 93 cents. So that is light. 101 is the estimate. Fourth quarter comp sales, they're looking for up 7 to 9%. Fiscal year comp sales up 12 to 13%. There looks like they're bumping that up. They had seen about 10 to 12% higher. So taking a look at that company, Caroline, in the after hours, we're seeing that move up about 1.8%.
And it's just extraordinary how department stores, some of these key retailers just powered back the moves from Macy's, the moves from Kohl's, and the fact that we'd sort of written them off, thought that that type of buying was different. But e-commerce, now people want to get back into bricks and mortar. They want to actually be able to touch and feel the things they're going to purchase if we're worried about supply chains to a certain extent. And these companies have really managed their inventories ahead of the holidays.
But is that want or is that kind of necessity right now? A lot of people have been spooked by the fact that you order something online, you have no idea whether it's going to show up or not, or when it shows up. So maybe there's a sense of, let me just go into the store and see what I can get and what's physically there.
Well, Ross Stores is certainly highlighting all of those topics as they're saying that it has significantly exceeded all of our expectations despite waning government stimulus, huge uncertainty relative to the spread of the variants. Even though their operating margins are down just a little bit from 2019, that is offset despite some of the big headwinds that they're getting from, wait for it, higher freight, wage, and COVID-related costs. So managing all of those supply chain has been a theme, Tim, that we've seen throughout all of these earnings.
Yeah, I want to go back to something that Caroline said that was fascinating that we learned from Macy's earlier in the day today, because even though consumers do want to get back and be in stores, still there's a lot of pressure on Macy's coming from Jana Partners to actually spin off its e-commerce business into a separate company, similar to what Saks did. And we think about it in the context of, direct-to-consumer companies actually going and adding stores, at least before the pandemic. So there is this sort of bifurcation happening when it comes to retailers that have been reporting of late.
Well, we should point out, too, just on this same conversation before we move on, Farfetch is out with earnings, and they're not necessarily good. Obviously, they're pretty much only an online sort of network rather than the omni-channel thing that we're talking about. A loss per share that was not necessarily as bad as what the street was looking for, but still a loss here. And then you talk about some of the gross merchandise volume. It's growing here, but you're not really seeing the reaction in the shares. And I'm wondering if this does become sort of this play for investors between some of the more brick and mortar and omni-channel names and some of the more pure play e-commerce names.
Yeah, sinking 10% post-market as that revenue does indeed miss for Farfetch. It's interesting that we continue to see, of course, some pretty ugly numbers coming out of the Chinese e-commerce giants as well. Alibaba was pretty underwhelming, to say the least. We got Baidu coming out and saying, look, it still sees its fourth quarter revenue at 31 billion to 34 billion yuan, but they had a profit beat overall, but a soft ad market. And just your Oatly update after a rough kind of week. They're opening their first Chinese factory. Nice. Is that going to stem some of the supply chain issues for them?
To do what? What's in the factory?
You got to make the oat milk. It doesn't grow on trees.
No, it doesn't.
Where do
Cartons? Maybe that's what they're going to be making.
Oats don't milk themselves.
But it is funny what you say about, Alibaba.
Where do oats come from, Tim? Now I'm confused.
Oh, I guess they do grow on trees.
Don't they grow somewhere?
Oat milk doesn't grow on trees, though.
I don't know.
Oats, peas, bees, and barley grows. I think that's how it goes.
Maybe Tim's
right?
living in the metaverse and maybe oat grows differently.
Apparently none of us are farmers.
In the metaverse.
He's just vertically farming all of his oats.
Vertically farming. He's a Brooklyn boy. So I'm sure he's got artisanal oats.
Artisanal oats in Brooklyn. Come on over.
He's just juicing them at home.
All right. He's probably growing on the roof. All right. I think we've got to run. That's going to do it for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We'll catch you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so a bunch of earnings, and certainly we'll be tracking them into the Friday trade. We have Ross Stores out, Applied Materials. We're definitely seeing some action in the after hours right now. Applied Materials, let me just take it up. It's up, it's down about 7.3% here in the after hours, so some disappointment there. And then Ross Stores, we saw them bouncing around a little bit.
Yeah, higher now by just about 0.4%, but you're right, Carol, lower right after these numbers came out.
And Applied Materials, the big one is in terms of the outlook, seeing first quarter net sales of $6.16 billion plus or minus $250 million. And the estimate that's out there is for $6.45 billion. So that's light in terms of the outlook.
All right, we're going to keep following these earnings for you and bring you updates as we continue to dig into the numbers. In the meantime, a check of the latest world and national news. Nancy Lyons is standing by in Washington, D.C. Hey, Nancy.
Thanks, Tim. President Biden is meeting today with leaders of Mexico and Canada. It's the first summit for the three countries in 5 years. Among their goals is to work together to recover from the pandemic. Well, a new pandemic-related study shows simple measures like wearing a mask and washing your hands can help you avoid your risk of contracting COVID-19. Bloomberg's Amy Morris has more from Washington.
The review of 8 studies published in the British Medical Journal finds that wearing a face mask will cut the risk in half. Hand washing also cuts the risk in half. Social distancing cuts the risk of contracting COVID-19 by about a quarter. The study's lead researcher says the data show getting control of the pandemic will rely not just on a high vaccination rate, but continued public health measures. Researchers could not assess the effectiveness of other measures like quarantines, lockdowns, and school closures. In Washington, I'm Amy Morris, Bloomberg Radio.
2 men convicted in the murder of Malcolm X are now officially exonerated over 55 years after the civil rights icon was assassinated.
The joint motion is hereby granted. And the record.
Judge Ellen Bybin said she regretted that the court could not fully undo the serious miscarriage of justice in the case. The convictions of Muhammad Aziz and the late Khalil Islam were dismissed after prosecutors and the men's attorneys presented newly found evidence that the men were not involved in the killing and that some very pertinent information had been withheld from the defense. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Carol Masser, along with Tim Stenovic.
Hello.
Hello. So Laura Davison and Allison Verspril of Bloomberg News putting out a story about the IRS, Internal Revenue Service, could seize cryptocurrency valued at billions of dollars that's linked to tax fraud and other crimes in the coming year. This is according to the agency's head of criminal investigations.
Okay, so the IRS actually seized $3.5 billion worth of cryptocurrencies during fiscal year 2021. That's a figure that accounted for 93% of all the assets seized by tax enforcement that year. That's according to an IRS criminal investigation annual report that was published today.
So what is this about?
It's about okay. Well, let's keep reading into it because there's some important quotes here.
It's like, is it just like the IRS going after assets that were accumulated via fraud? It's the same thing. It's just another asset.
Exactly. So if they're linked to tax fraud and other crimes in the coming year, so if these are assets that are involved in crimes or linked in some way to fraud.
So wire fraud, money laundering, distribution of illegal narcotics, tax fraud.
Right.
Okay, and that included $1 billion stolen from Silk Road, an online Bitcoin exchange that was shut down back in 2013.
Because remember, I mean, a lot of people talk about crypto as an investment, but at the end of the day, it's also a currency.
Right.
So if people can use it to buy and sell and are using it to buy and sell, it's something that can be seized.
And for all of
it's an asset
you
too.
criminals or would-be criminals out there.
Okay. Listen up, criminals.
Congress, I'm not saying that that's part of our audience, but who knows? Congress recently granted the IRS more ability to surveil cryptocurrency transactions in the infrastructure package that President Biden signed into law on Monday. The law will require crypto brokers to track and report transactions to the IRS in an effort to give tax authorities more visibility into virtual currency trades. That's big.
It's big, and there was some discussion earlier in the week in the crypto community, Carol, if that was responsible for the sell-off that we've seen over the last 5 days in Bitcoin and other cryptos.
So that cool cryptocurrency all of a sudden becoming more legitimate.
This is nothing. This was telegraphed. We knew this was in the bill. People knew this was in the bill, and he just signed it on Monday.
But it makes crypto more legitimate.
It does.
So on one level, that's a plus. The other, some might see that as a negative, I guess.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. We begin with Applied Materials. Shares right now down 5.5%. Applied Materials did forecast adjusted earnings per share for the first quarter, but its guidance missed the average analyst estimate. Again, Applied Materials, AMAT on the ticker. It is down now by 5.5%. An earnings beat from Williams-Sonoma. Third quarter comparable sales coming in with a gain of 16.9%. Estimates were for a gain of 13.8%, also raising its fiscal year 2021 outlook. But as we get the headlines, we're looking at Williams-Sonoma down 3.1%. 66 record so far this year for the S&P 500 index. Big tech driving stocks higher today with the S&P up 15, up 0.3. NASDAQ also at a record up 72, up by 0.45%. NASDAQ 100 index record there up 1.1%. A down day for the Dow, falling 60 points, down by about 0.2%. Cisco weighing on the Dow. Cisco down today by 5.5%. 10-year yield 1.58%. Spot gold down 0.4%. 18.60 the ounce. West Texas Intermediate crude up 0.6%. 78.83 a barrel on WTI. Bitcoin down 3.4% at 58,090. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. Well, Sonos shares traded by the close just down about 1.2%, but a fair swing today from a 3.7% gain to about a 3.9% decline throughout the day. Stock, though, up more than 42% this year. Remember, though, after the close yesterday, company giving a revenue forecast that was greater than Wall Street expectations. The auto products makers chief executive officer, though, warning about supply chain issues that would continue to be a problem into next year. Full transparency, Tim and I are both big customers of Sonos products.
Yeah, I spent a lot of money at Sonos over the years, as is my entire family. Patrick Spence is that chief executive officer. He joins us on the phone from Santa Barbara, California. Patrick, it's great to speak with you again. I want to get right into it because you told our Bloomberg News team that the fiscal first quarter, what we're in right now, the holiday period, looks to be the most challenging period from a supply perspective. It'll be a challenge to show growth, you said, over last year's strong quarter. Give us the details here. What is the most challenging part of the holiday quarter?
It's great to be back, Tim. Thank you. The most challenging thing right now is supply. We have a significant amount of demand. The consumer is extremely strong. And right now we are just working hard to get as many products as we can into consumers' hands in this holiday quarter. We're air shipping. We're out on the market buying the chips that we need from other companies and brokers and all sorts of things. And so our team is hard at work doing everything they can to make that happen. But we do see that as the, really, I guess I would say, the period where it's going to be most challenging before we turn up to the kind of growth that we outlined for fiscal 22 for this year. So it's most acute in our fiscal Q1, the December quarter, and it should get better as we progress through 2022.
So, got to ask you, Patrick, one of the things we're trying to figure out is really understanding our supply chain, right? I mean, for most Americans, it's you're either ordering online or you go to a shelf and it's there or not there. And that's our kind of understanding. We're peeling back the layers, right, as we keep showing ports and how things move around. What's your understanding of what broke down in terms of our supply chains? Is it because people aren't working? What is it?
Well, if we go all the way back to the pandemic, because really, Carol, we've been dealing with this, all the way through 21, and that's why I'm so proud of our ability to really execute over that period and deliver the kind of growth we did in fiscal 21. Mm-hmm. But if we go back to the beginning of the pandemic, all of a sudden, everybody pretty much turned off the tap in terms of production. So all of a sudden, everybody turned it off overnight as people went into lockdown and tried to figure out what the heck was going on. And then all of a sudden, with the fiscal stimulus and everything happening and people figuring out how to work from home, I think not just us, but in many different categories, we saw a much stronger consumer than anybody had expected. And all of a sudden, all those factories and all like that deliver the hundreds of parts in a Sonos speaker, plus the manufacturing facility, plus the shippers, plus the ports, all had to completely adjust and go the other way, which is, okay, now we need to really gear up because it looks like there's a lot of demand there. And throughout the year, I would say, from everything I've seen, all aspects of the supply chain have been trying to catch up. And that's what, we've been trying to kind of manage back and forth and trying to deal with. And so that's why you see it. And it's been ups and downs throughout the year, and it's been through all the chains. I mean, you start with the production of the chips and all the components and those hundreds of parts that go into a product, but you end with a situation where you're trying to find containers and you're trying to, find shipping slots.
Yeah.
And we see the backup in LA and all of the areas. And so it really is, it's been an end-to-end period. I think the good news is, as you're hearing from many companies, as we get into 2022, we expect that to improve significantly. But right now is a huge challenge.
So one thing I want to ask, and I'm not asking to get political, but can the administration do something to help with the supply chain from your perspective?
I do think the push to really be supporting the offloading of ships, right? And I think they extended the operating hours there. I think that's a good thing. So anything to enable the flow of goods, I think right now is helpful. But a lot of these things, do take some time just to work through. And at least in our case, consumer demand has never been higher. So it's kind of like, it's kind of hitting in a perfect storm in that way.
Well, let's talk a little bit about that consumer demand. And I think back to just a few months ago when I ordered a move for my dad for, I can't remember if it was Father's Day or for his birthday. And I think this was back in May. And it actually didn't ship for, I think it took a couple months for it to get to him. And if I look at the website now for Sonos, even the move right now is expected to ship December 17th. So are you saying right now that people who order this potentially couldn't get it by Christmas?
Yeah, Tim, it'll depend on the product.
Wow.
If you're in the country you're in and everything, you might be able to go to, Best Buy or Costco and be able to purchase one. But yeah, I mean, we keep that up to date on Sonos.com. So you can see, it's pretty transparent, quite frankly, how long it's going to take to get some of our products. And some you can get tomorrow, and some it will be weeks, but that's exactly what we're working through. And it does vary by product.
How concerned are you that somebody might see that and say, okay, well, I'm not going to buy that. I'm going to go with a competitor product rather than waiting for it to come in stock and getting it after the holiday?
This is something that we've been very focused on really since the beginning of the supply chain challenges last year. And so what we've been watching closely are two things. One is now that our direct-to-consumer business has grown so much, it's a quarter of our business. We announced that yesterday, and it grew at 47% year over year. We have a really, really good handle on what those orders are, how they're coming in. We can watch conversion. We can watch cancellations, importantly, and that has been very, very low, single digits, and it has not changed. So it looks like people are continuing to stick with our products, and I think it makes a lot of sense because this is a considered purchase, right? You're not rushing. You're not just like haphazardly going to order one of our products. You've usually done a little bit of research. You've thought about it, and then you're placing your order. And I think we're all living through a period. We just tried to order some furniture for our house where you're talking months, right? So in our case, sometimes with the weeks delay, it's not, relative to other things, it's not, extensive. And then the other thing we're doing is talking, very closely to our retail partners, and that demand from our retail partners has held up very well, and we check in with them, weekly, if not daily, in terms of how things are going, and all signals are the consumer is strong, and our order book continues to stay very strong in light of this, and so we're very grateful to our customers through that, but I think it's a reflection of the kind of products and quality in our system, right? Because once you're in the system, and we announced we now have over 12.6 million homes we're in, now that once you're in it, then you're going to add more Sonos to your home. You're not going to go add one of our competitors' products. So that as well helps our situation.
Hey, Patrick, one thing we want to ask you, and this is just something we know our audience is curious about. There's a bunch of lawsuits that are going back and forth between you guys and Google. Google has come out and said it's the rightful owner of patents on ways to keep music playlists in the cloud that form, we know, a key component of a suit that you guys filed over the Google Play Music system. Our reporting says that you call that contention nonsense. What do investors need to know about this?
Everybody can go look at the patents and understand when they got filed and, who the inventors are, which obviously we're confident are us, and that's why we initiated this action in the ITC. And the other thing I would say, if I, I am a large shareholder as an investor, I would say is, watch the milestones, right? And so Eddie, our chief legal counsel, mentioned yesterday that we're expecting an update from the ITC tomorrow, in fact, in terms of whether they're going to have the full tribunal review the decision that went our way in August, or what the next steps will be on that one. So if, for anybody watching that's an investor, I think watching that is probably the right way to ultimately look at it. And you won't be surprised to know we remain very confident and we're very encouraged by the August ruling and expect as this progresses to finality that we will prevail.
Look, you guys.
That, yeah.
Oh, sorry, Carol.
No, go ahead.
You guys are a $4.1 billion company. Alphabet, the parent company of Google, is a roughly $2 trillion company. You're confident you can take them on and prevail?
Absolutely. And Tim, I think we have to. Look, being a small American innovative company that, really invented the category, we can't let people, simply, come in and copy what we did, because it sets a bad precedent for every other, small inventive company that is trying to grow, and has created something new. And so that's a thing I felt very strongly about from the beginning. And I owe it to the 1,500 people that work here and have invented all of it and put their blood, sweat, and tears into our products. But I also think it's a bigger societal issue, right? We've seen it with other companies, whether it's Eero or there's a whole host of others, Zoom being copied by Google with their video solution. So I just think there's a bigger anti-competitive, antitrust kind of issue at play. And we went to the work of filing the patents and making sure that we were protecting our inventions really early on, but not all companies, have necessarily done that. So we feel strongly this is important for us to stand up.
All right, last question. Is the metaverse an opportunity for you, Patrick? Seriously?
Girl. So being the world's leading SAT experience company, we absolutely will be, wanting to play a role in the metaverse. I look at it and I say we're only in, less than 10% of the actual IRL in real life homes that we're in today. So we have a lot of opportunity to fill the in real life homes before we make a move into the metaverse. I think it'll be a while, but we're watching it carefully as we do kind of all of the exciting new areas that are coming up. And we expect to continue to innovate and adapt as the world changes. And if that's the place we're all enjoying great audio, we will be there.
All right, cool stuff. You laughed hard. It's got to be an opportunity. Patrick, be well. Have a good holiday season, and really great to check in with you. Patrick Spence, of course, the Chief Executive Officer of Sonos, joining us from California.
Santa Barbara, California.
I know.
One of the best places on earth.
Gorgeous California.
Yeah. All right, let's now get to Charlie Pellet for an update on business news. Hey there, Charlie.
Well, hello there, Tim. Lots going on after the close of trading. Let's begin with Applied Materials. That stock down right now. AMAT tumbling 6.5%. It is the biggest maker of machinery that's used to manufacture semiconductors. It delivered a weaker forecast than anticipated as supply chain constraints weighed on its business. Again, shares after hours lower now by just about 6.5%. First day of trading for Sweetgreen. It's a salad restaurant chain. It doubled its value in its trading debut after raising $364 million in its IPO. SG on the ticker symbol, and today we saw the stock advance by 76.8%. Tech shares drove the equity market to another record today. Volatile session ahead of tomorrow's options expiration. But if you're keeping track, and yes, we are, because that's what we do here at Bloomberg, S&P had its 66th record this year. S&P today up by 16 points, up 0.3%. NASDAQ also at a record, up 72, up by 0.5%. NASDAQ 100 index also at a record today, up by 1.1%. 10-year yield 1.58%. Gold down 0.4%, $18.59 the ounce. And West Texas Intermediate crude up 0.6%, $78.86 a barrel. Well, as for the market outlook, Victoria Fernandez is chief market strategist at Crossmark Global Advisors.
I think equities right now is the best place to be, and that's being driven by the consumer. We've seen it in the retail numbers that demand is just red hot right now, and I think that's going to continue through the holiday season and into the first quarter, even with the kind of spot inflation rates spiking.
Victoria Fernandez of Crossmark Global Investments. Again, recapping, we do have Applied Materials tumbling 6% after hours. S&P at a record up 15, up 0.3%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're having some fun here in our studio. It's a company steeped in watchmaking history, one that goes back some 2 centuries. I think I've got that right. Officially, I believe, though, actually making luxury timepieces starting around 1845. And they have some we've had a lot of fun prepping for this one.
We have Wilhelm Schmid is the chief executive officer for A. Lange & Söhne, and I'm German, and I
Did he say it right?
don't know if I got that exactly
You have
right.
you have no idea how many times we've been practicing.
We've been
this.
practicing. We've been watching YouTube videos. We've been watching videos from
I
your
think we
team.
have to fix our weekend show.
I've been going to German class. I haven't been going to German class, actually. He's with us live in the Bloomberg Interactive Broker Studio. How are you?
I'm very well, thank you.
It's just, we were laughing earlier because it's just so nice to all be in here together, right? We've had a couple in-person guests from outside of the Bloomberg universe recently, and it really feels like things are, to a certain extent, getting back to normal. Give us an update on your business and how you fared during the pandemic.
I think the pandemic was one of these events that nobody saw coming, at least we didn't. I'll be quite
Bill Gates
frank.
will say differently, but that's okay.
Yeah, probably. I mean, that's why he's a billionaire and I'm not.
Fair enough, fair enough.
But we've always been a successful company, and there's nothing more difficult than to change, and we had things to change, than changing, a running engine. And with that sort of standstill within weeks, it gave us the time to prepare and to accelerate and transform. So it wasn't all bad, even, of course, it was quite tragic for a lot of people. I'm not denying this.
It's fascinating, Willem. You're so great. I think everybody thought, okay, that's it. And then all of a sudden, everybody did pivot. They were already thinking either about digital strategies. Did you guys go online in digital or increase what you were doing there?
Absolutely, because you were supposed to go on Watches and Wonders in Geneva. That should have taken place in April 2020, and obviously it didn't. We had about 3 weeks' time to move from a physical Watches and Wonders, a watch exhibition, to a digital. So we had 3 weeks or 4 weeks time to prepare. That was a good test bed for our agility and how to get there. And then we moved on. And what people need to understand is, had you asked me 3 years ago, can I approach a client that I've never met before and tell them, look, we go on a Zoom and then we'll just chat a little bit, they would have refused. These were the days where they would expect me to fly in or them to come to me, and you have a sit down and a dinner and all that. But not only had we to change, but I also believe that the client's behavior and their whole expectations have changed.
Is that continuing?
I guess.
The digital and being able to do that with clients? Are they now saying, hey, Wilhelm, come on, the world's reopening. come take me for dinner.
There's a big appetite for that. I'm not denying it. I think in future we will see more hybrid than ever before. So we'll get all the administration work done through the digital, information, a little, catch up here and there. But it all will help us to even more celebrate that moment when you just sit together and you chat and you talk and you just see who the other is, how he feels, his facial expression, body language, and all the things you can't see, at least I can't see on a Zoom meeting.
No, it's fair.
Well, for our audience not familiar with the timepieces, what sets them apart from the other competitors that are out there? And because, and look, we were talking about timepieces that are 6 figures.
Yes.
Cost hundreds of thousands of dollars. In some cases, over $1 million.
Yeah, we started about 20,000, and then, that's not the sweet spot. The sweet spot is a lot higher. It's at that part of the market, it's a package. And I think our package is not Germanness. It does work.
What do you mean by that?
Well, you can always read the time immediately. You see the data immediately. There's a prioritization on the dial, which will give you the most important information, regardless how complex or complicated the watch is on a first glimpse. It goes so far like, we have a minute repeater. That's really sort of the highest complication almost that you can do in a watch. It gives you the time in an acoustic way. So we do that waterproof, which is pretty stupid because, you don't want to seal something that should make a noise.
Right, right.
But because we are worried that a drop of water when you wash your hands would hit the crown, it will go into the movement, it would damage. So that's the German thing. Then there is a lot of Handarbeit, craftsmanship, labor in it.
Well, tell us, like, to create a watch.
Yes.
And I don't know if I don't want to use the word an average watch that
Yes.
you guys make, but how long does it take?
That's, because at different level, we produce
Correct.
everything in-house regarding the movement. So that's one department. Then it goes to finish. So we have over 100 people that do polishing, decoration, engraving. Then these little parts, they go to either pre-assembly or they go to the watchmaker, who is very specific and complicated. It's just one watchmaker. And the most complicated watch, it takes him a year. Or her.
Wow.
And on average, I would say a month. Wow. 2 weeks to a month. And we do something which is very German, and some people would say very weird and inefficient, but we just love it, and we believe it's for a great customer purpose. We assemble every watch twice. So what we do is we assemble it, then it goes through an extensive test to see whether everything is working. And when we know it does work, we disassemble it again, we clean it, we put the final decoration on, lubricate it, encase it, and then it goes through the next test cycle.
Oh my gosh.
So yeah, it sounds a lot, but therefore our return quote, if there is a mistake, and as I said, it's watchmaker and engraver and finishers, human beings, and they have good days and they have bad days. So we just want to avoid that a bad day watch ends up on your wrist.
Well, what was the saying that you never wanted to buy, like a car or something that was made in the factory on a Monday because everybody's like hurting after the weekend? No, right? There's like rules. Pretty incredible. Sit tight. We've got to do a little bit of news, but we want to come back and we're going to continue with Wilhelm Schmid. He's a Chief Executive Officer of Lang & Söhne. Did I say it correctly?
Wonderful. You're getting better.
Master.
My European ancestry coming
Very
through.
impressive.
Sweating there a little bit. We're going to continue because what I am curious, and we'll talk about, because you sell around the globe, you have boutiques all around. I want to get an idea of demand and who is buying at this point. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. Let's get a check on world and national news.
Nancy Lyons is standing by in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. Julius Jones will not be executed in Oklahoma. Oklahoma Governor Kevin Stitt commuted Jones' sentence to life in prison without parole just hours before he was set to die. His supporters cheered outside the prison when they heard the news. Jones has spent more than half of his life in prison for a 1999 carjacking and murder that he claims he was framed by his co-defendant. Georgia prosecutors spent much of today cross-examining defendant Travis McMichael, who is one of 3 men on trial for murder in the shooting of black jogger Ahmaud Arbery. Cobb County prosecutor Linda Dunikoski walked McMichael through his initial encounter with Arbery, where McMichael had claimed on paper that Arbery reached into his pants.
Yeah, he did not threaten me verbally, no ma'am.
All right. Didn't brandish any weapons?
No ma'am.
Didn't pull out any guns?
No ma'am.
Didn't pull out any knife?
No ma'am.
Never reached for anything, did he?
No.
He just ran.
Dunikoski contends there was no justification for McMichael and his father to arm themselves and to chase Arbery when he ran past their Georgia home last year. Get ready for a rare celestial event tonight. It's the longest partial lunar eclipse of this century and the longest in 580 years. It will grace the night sky late tonight and early tomorrow morning. A lunar eclipse happens when the sun, earth, and a full moon form a near-perfect lineup in space. Weather permitting, it should be visible all across the country, and it's expected to last more than 3 hours. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. We're still with Wilhelm Schmid. He is Chief Executive Officer of Lang & Söhne, and here in our Interactive Broker studio. We're going to talk for a little bit, do some more news, and then come back and continue. You were at Harvard yesterday.
Yes, I was indeed.
How come? Harvard Business School?
Yes. A couple of years ago, they came to us and said, can we do a business case of Lang & Söhne, and specifically about pricing and how you price innovation and how you find the right price for a watch. And, I think they were with us for about a week or two. I did a lot of interviews and then compiled that business case study. And now twice a year, again, thankfully, physical again. I go there for the final class and just have a Q&A with the students that worked on the case. And it's very interesting to see the change over time.
Well, it's so interesting. I mean, and for people who aren't familiar with the way these business school case studies work, these are intensive investigation experiences that are then written up into really dense material that includes balance sheets, income statements, numbers, and oftentimes they're led by professors, but it is a big deal when the person who's involved in the case study can actually come in and talk about it.
What do students ask you?
It's interesting. All sort of questions. A lot of is about how do you motivate your people. How do you? Because a watchmaker is a watchmaker for 40 years, 50 years, and it's a 3-year apprenticeship training, 2 other years or 2 more years before you really can work on watches. How do you keep them motivated? Specifically now the young people, and we operate our own school. So we have about 12 to 15 young people every year that start that program.
Right.
And how do you motivate them? How do you keep them? So that's something which is of general interest, and I like that because it means the focus is back on your people.
Right.
How do you motivate people?
And it's the future of your company. You've got to make sure that
Absolutely.
that flow continues. We're going to continue with Wilhelm Schmidt. He's the Chief Executive Officer of Lang & Zuna. He's here in our Interactive Broker studio. You're listening to Bloomberg Business Week. We'll be back in a moment. And this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Records on Wall Street today for the S&P, NASDAQ, and the NASDAQ 100 index, but lots of earnings after the bell, specifically tech earnings, and Applied Materials shares lower now by 5.7%. Tech, by the way, did send NASDAQ and the NASDAQ 100 index to records. Applied Materials, biggest maker of machinery that's used to manufacture semiconductors, did deliver a weaker forecast than anticipated as supply chain constraints weigh on its business. Applied Materials now lower after hours, down by 5.7%. Also reporting earnings after the close of trading, Palo Alto Networks. It boosted its revenue forecast for the full year. The guidance beat the average analyst estimate, but shares after hours of Palo Alto Networks down now by 1%. Also after earnings, Williams-Sonoma slumping now by 5.1%. Big day for a lot of other retail names. Macy's this morning beat estimates, shares surging today by 21.2%. Kohl's up today by 10.6%. The Dow fell 60 points, weighed down by Cisco. Cisco down 5.5%. The Dow dropped 0.2%. S&P at a record up 0.3. NASDAQ also at a record up 0.5. 10-year yield 1.58%. Spot gold down 0.5%, 18.58 the ounce. And West Texas Intermediate crude up 0.7%, 78.91 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
What? Oh, no. Okay. We're going to come back. We're still here with Wilhelm Schmid. Yes, we're here with Wilhelm Schmid. He's Chief Executive Officer of Lang & Söhne. He is here with us in our interactive broker studio. Got about 6 or 7 more minutes, so we want to just pick your brain about what else you're seeing here. You do have boutiques, Wilhelm, all around the world. Singapore, Munich, Costa Mesa, Beijing, Tokyo, New York, Miami. I mean, all around. Are the buying trends the same, or where are you seeing really strong buying trends among your customers and clientele?
Because we only produce 5,500 watches a year.
Okay.
So we're not really a company that you must ask if you want to understand.
Do people
trends.
usually order first?
Many times, yes. Yeah. Often, everything that leaves the factory is predominantly ordered or already sold. So we just have to produce it. That's the more difficult part of it at the moment, at least. We're not good company if we ask us about trend, because at 5,500 and we have about 70 different watches, 36 different movements. So,
right.
We build everything which is in line with our Lang & Söhne, and that is what enough people like to, keep us very busy.
But who are the biggest buyers? Is it Asia? Is it Europe? Is it North America? Or is it a sampling of everybody?
It's because we work with an allocation system. That's a very difficult question, because if I would allocate all watches to China, probably would all be sold in China, which of course nobody wants to put all eggs in one basket. So
right.
Well, what we see today is we always want to have a nice balance between Europe, Americas, and Asia. So that's how we structure our business, and then we see growing interest in the Middle East. And that means when there's a problem in one country or continent, we can still nicely outbalance that with the other countries, which is important because there's 500 people working in the manufactory,
right? And
I can't just get rid of them. They have to constantly work also to maintain their capability.
Right.
So we are not really designed to ramp up or slow down quickly.
Sounds like a very well-oiled machine in terms of supply and demand.
Yes.
Can you talk a little bit about the training that goes into the watchmakers?
Yeah.
And I'm curious if speaking of trends, not from a fashion trend, but from an employment trend, if you're having trouble attracting tradespeople to take on this kind of work in this day and age.
Gladly, we have our own school. So it's a government program, so the exams were conducted by the government, but the trainer, the instructors, and all that is with us. So all the practical things, they happen in the manufacturing. We realized that we can do 12 to 15 new watchmaker a year, watchmaker and toolmaker, because we produce most of our tools ourselves. So that's a very important part of the business. And because Glashütte is so synonymous with watchmaking, there are a lot of people living in and around Glashütte. They are highly attracted to become a watchmaker, and as we are the biggest and the most famous, and I say that with no arrogance, it's just a simple fact, we're also first choice. So yes, it's a lot more difficult today than it probably was 100 years ago, but we're getting there.
So tell us about the new Zeitwerk Honeygold Lumen.
Yeah. The first Zeitwerk that we launched 2000.
Forgive me, I mispronounced.
No, don't worry. That's you're doing actually very well. I've heard a lot worse, and you're actually very good, both of you.
You're gracious. Thank you.
The Zeitwerk was something that nobody expected because it is so unusual looking and it is so different from anything else in the market that it was hugely controversial in the beginning. Gladly, there was before time social media, so it took a lot longer to go through these controversial discussions.
Right.
At the end, that's today one of the trademark. It's a watch that nobody else has. Everybody knows, because it's very complicated to produce. We can only produce very small numbers.
And you're making is about 200 pieces
well,
or so?
for this year, only 200. And the lumen means that you can, if you look carefully, you can look through the crystal and you can see the side that you usually can't see from our movements because it's underneath the dial.
Right.
And on top of that, because there's luminous material in it, it'll be charged. And you have these two phases, the day phase and the night phase.
That's
so
pretty
and
cool.
at night, it glooms. It looks really, really cool.
I wanted to ask our producer Ari. I know we were throwing some stuff up on YouTube, and I think it was going out the visuals, and maybe we'll run them again so that everybody can see what you're talking about. How difficult was it to make this?
Oh, very. It's like if you.
It's coming up on YouTube, and I don't know if that, in case you want to. There's a little bit of a visual for everybody. Go ahead, you can talk to it.
Yeah, it's very easy if you have a small car. And I use that to illustrate how difficult the watch is. You need a small engine and small brakes to accelerate fast and bring it to a standstill. If you have a big car, you need a big engine and heavy brakes.
Right.
If you have a disc that's so much more weight than just a little hint, that you need a lot of power to operate it and then to come to the right standstill without damaging the movement forever.
Right.
And that's why this movement has a remontoire system, which is sort of a constant force. So you have a huge and heavy mainspring, which is charging a little spring, which is then releasing and is doing that. Otherwise, it would destroy every moment it moves.
It sounds complicated.
It is, believe me, it is.
It's incredible.
Wilhelm, they say if you have to ask, you can't afford it. But I have to ask because our audience is
Our
dying
parents
to
both
know.
have said that to us, I guess, at one time or another.
We're talking around $150,000?
145, yes.
Okay.
Yes.
And 200, as you mentioned?
Absolutely. And again, and that's a real challenge for us because 200 and probably 1,000 people want the watch. So I already apologize for everybody who applied for it and we couldn't deliver, but that's always a challenge with limited editions.
Scarcity is, though, part of the name of the game here.
I guess so, but it's not scarcity because it's a marketing trick. It is just the capacity we have to build these watches, and we do not want to take longer than 3 years to build 200 watches. So that's why we say 200, and that's that's the limitation. It's a capacity restriction.
Well, there's obviously been some really serious analysis of like what you can do, right,
Yeah.
and produce. This was so much fun. Thank you so much.
Thank you.
Come back.
Thank you.
Come back with the Lumen, if you would. Just bring it just to show us.
I just want to see it.
I just want to put it on my watch. I'll take off my Apple Watch for that. Wilhelm Schmid, thank you so much. Chief Executive Officer of Lang & Söhne on right here in our studio. That was fun.
That was really fun.
All right, everybody. For Tim Stanovic, I'm Carol Masser. Be well.